Hey folks, Dan Frio here, the rate update. Today is September 8th, 2020, and I completely botched the date the other day. And I don't know how many people emailed me and texted me and posted on the thing that I had the wrong date or said the wrong date. So my apologies. And welcome back for a long weekend. I hate long weekends when I don't work, and I apologize. I took off Sunday and Monday. I didn't even open my laptop, and today I paid for it. There was a slew of people, thanks to you guys for watching and coming out and applying online and sending me your rate quotes and everything. I literally didn't get out of my chair from 9 this morning till just now. I got up, went to the bathroom, and was like, oh man, I got to do this video. So that being said, you're going to have some good news if you're looking to refinance your mortgage or repurchase. There's going to be bad news if you stayed in the stock market and didn't get out, like I said. So we'll be right back with all that information. Don't go away. We'll be right back. Well, if you don't believe me, just go back I think it was last Wednesday when I said, guys, if you're in the stock market, I'd take money off the table because I think things are overpriced. I can't time it perfectly, but I'm seeing at least a 5% reduction in the markets. Well, the Dow is over the 5% correction that I predicted, and the NASDAQ is now down 10%. I figured we'd be in a range of between, and I'm not saying this, so go back and look at or watch my videos from last week. I said I see at least a 5 to 10% correction coming soon, and that's exactly where we are right now. The good news for all of that is right here. So this is actually helping us tremendously in the bond market because we still have the Fed buying up mortgage-backed securities. They're stabilizing rates. And now we have consumers dumping out of the stock market because they don't want to lose 5 or 10% in a week. So you have some really smart money coming out of the stock market, and they don't just sit in cash. They put it to work somewhere, somehow, some way, and they buy bonds. And what is this number here that we're watching, or that people follow me every day, and I'm obsessed with this number? It's mortgage-backed securities. This is actually a bond, the price of a bond that consists of a whole bunch of mortgages looped together as one investment, sold as a bond out on Wall Street. You might have it in one of your investments, or you might not, or you might have it in a 401k and not even realize it, but it's an investment. So this number we like when it goes up because why? Green is good. Green means rates are getting better. Red is bad. Rates are getting worse. So today we saw a really good move with rates. But we picked up, we had a crash last week. And if you go back to my video from Friday, I said, you know what, I'm really not doing anything right now. I'm going to stay on the sidelines because there was, limited trading. So that means not a lot of people trading anything. So any move in a trade is going to exasperate, I don't know if that's a word, is going to emphasize the trade. So if some people are selling and there's not a lot of trading going on, you're going to have a huge loss. If people are buying, you could have possibly a huge gain. So that being said, we recovered quite a bit from where we were. And now all these triggers or all these analytics that we follow are coming into line. So let me explain this chart here. It's not just a Christmas, the prepping of a Christmas card with the red and green. There's actually substance behind all of this. So let's see what's going on with this, and then let's go through some economic data. When people are trading or they're analyzing stocks or bonds or basically anything, temperature and all that, you see fluctuations. And then you also see where the norms are. So what we call, like in this case, we're going to say this is a ceiling that where things would trade. So let's say it's the weather, saying, well, in July, weather normally doesn't exceed 100 degrees. So if you're out in California or Arizona, you've exceeded 100 degrees. But let's just say, for example, it's 100 degrees. And then the floor is, let's say, the average temperature low is, or the low for the time frame of this month is 70 degrees. So the weather is going to fluctuate in between this. That's basically what we watch in bond prices. Again, it's prices. So as the price goes up, yields come down. So we love when these are going up. We hate this. We hate this duration. Okay? So we know we're going to be trading in this level, most likely, up and down within this cycle, right through here for the short term. The long term, we're going to have a lower bottom. Okay? So that gives us a little longer duration. So in between there, though, let's say we have, I'm going to make it make sense, we have a daily average on what the temperature is, a weekly average, or a 5-day average, and a 15 or 20-day average. Let's just amuse me on this one. So right now, this is the 25-day moving average of the bond. This is a 50-day moving average of the bond. This is a 100-day moving average of the bond. When I was talking before, I'm like, you know what, we should, and I hate to say it, I'm pretty much dead right where I was looking at. We're staying right here where I thought we would be. When we dropped way below it the other day, if it wasn't a holiday weekend, I would have kind of been a little skittish. But we had this big move down, plus the stock market was doing really bad. So I'm like, that's got to be just a short-term little blip because of the holiday. So we should pick up a good portion of this on Tuesday and probably stabilize on Wednesday, because there's still probably a lot of people traveling today and might have even gotten stuck somewhere. I had a person that I was supposed to be seeing today that was coming from Denver and couldn't make it on their flight today because yesterday was 90, today it snowed. So what happens is, why did I pick this line? Well, it's a median between the ceiling and the floor. And it's also right in the 25-day moving average. That's where I thought we would stay. And another reason why is because look at every time we hit this, we kind of just stopped. So to me, that's giving me a ceiling and or a floor, or a point where the trading should be stabilized. Unless there's data that comes out that's just way out of the ordinary. In today's world, that's not hard to do. We should be staying right around these levels, okay? So somebody responded to me today saying, hey, rates just hit an all-time low today. And no, they didn't. I mean, they basically were off of that mark. We're not at the all-time low anymore. Pigs get fat, hogs get slaughtered, and the shirts are on their way. So that's where we're at right now. So I don't see any. We should probably stay around these areas right now. Some good news that helped us today is the Dow was down 632 or 2.25%. That's a big move for one day, and the Nasdaq is down 10. A lot of people are getting out of this. And moving their money somewhere, somehow, some way, and they're moving into bonds, and that's what's helping us. Economic calendar right now, basically today there was really no news at all much, instead of consumer credit changes, and it actually went down, which is good. It means how much people are using in credit. We have a Treasury auction tomorrow, and then here, these areas right through here on Thursday, these are areas that we're going to be paying kind of close watch on, because these numbers right here, the PPI and PPI and the PPI and the consumer, all this stuff, these are inflation watches. And like I stated in the past, why do we watch this? This is one of the biggest triggers or things that the Federal Reserve watches. Their two main priorities is jobs and keeping inflation in check, and maximum job growth. They're doing everything they can right now to keep rates as low as they possibly can in all sectors to create spending, thus will create jobs, because things need to be made. But they don't want inflation to run out of control. So we're going to monitor this, and we also monitor employment numbers. You're going to see there's a summary of what happened today. Really nothing here that really stands out. So basically a kind of a slow day for everything in general, but the stock market crashed, pushing money into bonds, and that is what helped us today quite a bit in the bond market with interest rates. So that is it for today. Short and sweet. There's really nothing that I can come out and say that, here's what's happening this week in the news. There's not a lot other than Thursday and Friday. Some things are going to get posted about inflation. I am having surgery tomorrow, so I'm not planning on it's nothing major. It's just something I have on my hand that needs fixed, but nothing major there. So if I do post tomorrow, I apologize. I might be still under sedation, so I'll apologize now. That being said, if you like what you see, all I ask you to do is just please give me a thumbs up. Subscribe down below. It helps me reach others. Click the bell. Every time I do post a new video, you'll get an alert, and I'll try on there to say, here's specifically what the video is about. So then if you like it, great, you watch it. If you don't like it, let's say it's in regards to I said this the other day and I hate to keep beating this one, a reverse mortgage, and you don't qualify, nor do you want one, don't watch it. But if you want my assistance in following the trends, you're looking to refinance, you're looking to buy, I would love to help. Here's the best way to reach me. You can go to therateupdate.com. That is right here. There's two ways to get me. You can call. You can reach me personally at 844-775-LOAN. That's 844-775-5626. I would love to follow you or you to follow me, and we get acquainted on any of my social medias, Facebook, Twitter, LinkedIn, Instagram, YouTube. So you're watching YouTube right now. Or if you'd like to email me, and I'm going to tell you some things that you could email me that would help you and me be able to offer you a quote that's kind of dead on the money. So here's what happens on a daily basis. I probably get 10, 15 of these a day. People are you're out there looking to refinance, and you get a quote from someplace, you went online, and then you finally stumbled across me because a friend told you about me, or you just Google searched, mortgage rates on YouTube and you found me, or even on Google. And you're like, I wonder what he could do for me with mortgage rates. So I always ask, get a comparison. So here's what I would like you to send me. Send me a copy of what's called your loan estimate or a fee worksheet. One of the two. You would get one of the two. We as a company, I have a tough time creating a loan estimate, I'll be honest with you, because it takes a full application, and a lot of people just want a quote. So I'll just send you a quote. But if you already have one, email it to me. And what it's going to give me is it's basically going to give me everything I need. It's going to give me your address. It'll give me your value of your home. It'll give me the loan amount you're looking for. And the two biggest things we're looking for is what rate are you getting quoted and what costs are involved. Don't be inundated or overwhelmed over the interest rate, because the interest rate might be, okay, I can get you 2.5. I can't get you 2.5. I can with costs. But somebody might come back and say, I can get you 2.5. And you don't really pay attention. And then you come out to find they charged me $10,000. I could have got 2.875 and it would have been no cost. Well, the difference in the payment is $20. I never recover or recoup my closing costs. It makes no sense. So we want to see what your rate is and the costs. So how do you do that? Well, the best way to do it is email me. My name is Dan Frio. You can Google me. That's the best. I always ask people, just Google me. You can find out all kind of stuff about me that you want. I've been doing this for 33 years now. You can reach me at D for Dan Frio, which is Frio at preferredrate.com. So that's dfrio at preferredrate.com. I'd love to hear from you. So if you're in the market of buying, selling, or not selling, refinancing or anything, please go to therateupdate.com. You can click either of these to get the ball rolling, or email me at dfrio at preferredrate.com. The quote that you have, I'll either respond by saying, God bless you, sign the papers, close, and lock it in, and don't look back. Or in most cases, I'll send you a sheet back with a red ink all over it saying I can get you a lower rate and maybe a lower fees, and in many cases, a lower rate and lower fees. So that's it for today. God bless. Take care. Have a great night. Be safe. Stay warm in some areas. And I might see you tomorrow. I might not, but I'll definitely be back on Thursday. And I'll see you then. Take care. Bye-bye.